Dear students, welcome to lecture 3 of week 8, wherein we will be talking about UCPDC guidelines for documentary credit. Over the week 8, we have been talking about issues related to payment systems in international trade. Let us begin the today's journey. At the outset, we will try to have an overview of what topics we are going to discuss today. The first, we are going to throw light on introduction and evolution of UCPDC. After that, we'll try to understand the objectives and scope of applications, followed by key definitions and parties under UCP 600. After that, we'll try to understand the fundamental principles of documentary credits, followed by core articles and operational provisions. Subsequently, we will try to understand the examination and handling of documents, followed by transport and insurance document rules. After that, we will try to understand the roles and responsibilities of banks, followed by compliance, discrepancies, and dispute resolution. After that, we will try to throw some light on digital adaptation, that is EUCP, electronic UCP, and electronic credits. The penultimate topic will be the practical benefits and case illustration, after which we will end the conclusion. Dear students, we have been talking about the documentary evidences and the importance of documents. The documentary credits, that is letter of credit, remain the cornerstone of secure international payments. We all know how important is letter of credit to facilitate trade. The cost is high, but the risk is moderate for both the exporter and importer in letter of credit. The documentary credits that are being used in international trade are governed globally by uniform customs and practice for documentary credits, in short known as UCPDC 600. This UCPDC 600 is issued by International Chamber of Commerce. Dear students, please remember the full form or note it down, because in the whole discussion we will be using the abbreviation UCPDC 600. The UCPDC provides standardized rules for letter of credit issuance, document examination, as well as payment. The UCPDC 600 promotes consistency, fairness, and predictability across banking systems worldwide. Let us now talk about the origin and and let us now talk about the origin and evolution of UCPDC. UCPDC was first introduced in 1933 by the International Chamber of Commerce to harmonize letter of credit practices. It was revised multiple times to reflect the trade developments, with latest version being the UCP 600, which was applicable from July 1, 2007. Under UCPDC, the documents are accepted by banks in over 175 countries as the universal framework for documentary credits. The UCPDC also supplements national laws but does not replace them. It means the national indigenous laws can also work side by side with UCPDC. They operate when incorporated into the letter of credit text. Thus, the existence of letter of credit is an important element in the usage of UCPDC 600. Let us try to identify the objectives of UCPDC. The first objective is to standardize implementation and interpretation of letter of credit terms and procedures. It is very important to properly interpret letter of credit terms in such a manner that the international laws and conventions are followed, as well as the fundamental principles of contract remains intact. The second objective of UCPDC is to protect interests of both exporters and importers through uniform rules. The third objective of UCPDC is to minimize disputes arising from document discrepancies or interpretation differences. The fourth objective is to facilitate faster document examination and payment. And finally, the fifth objective of UCPDC is to strengthen trust in international banking and trade finance. Let us try to explore the scope and application of UCPDC. UCPDC applies to all documentary credits, that is commercial and standby, expressly stating they are subject to UCP 600. They are binding on all parties, issuing parties, confirming parties, and negotiating banks. These particular UCP 600 documentary credits covers documentary compliance only and not performance or quality of goods. Thus, their application is restricted to the quality of documents, not to the quality of goods. These operate independently of the underlying sales or carriage contract. Thus, this is an independent contract which is reflected in documents. Let us now try to identify some of the key definitions under UCP 600. The first term is credit. Credit under UCP 600 means an irrevocable undertaking by an issuing bank to honor a compliant presentation. The second keyword is presentation. Presentation under UCP 600 means submission of documents to bank for payment or acceptance. The third keyword is complying presentation, which relates to documents consistent with letter of credit terms, UCP and ISBP, that is International Standard Banking Practices. The fourth key term is honor, which means to pay at sight, accept a draft or deferred payment. Any of these three. The last keyword is negotiation, which refers to purchase of drafts or documents by a nominated bank. Let us try to delve into the main parties in a UCPDC transaction. The first party is the applicant, which is the importer, who requests the letter of credit issuance. The second party is issuing bank, which issues letter of credit and undertakes to honor the payment. The third party is beneficiary, which is exporter, who receives payment upon compliant presentation. The fourth party is advising bank, which authenticates and conveys letter of credit to the exporter. The fifth party is confirming bank, which adds its payment guarantee, which is quite optional. The sixth party is nominated or negotiating bank. The role of the bank is to examine and forwards documents for payment. All these parties collectively form a network and a whole system of UCPDC transactions. Let us now try to identify the fundamental principles of UCPDC. The first principle is independence principle, which states that letter of credit is separate from sales contracts and banks deal only with documents, not with goods. The second principle pertains to strict compliance rule, which refers to that documents must conform exactly to letter of credit terms. The third principle is related to autonomy of bank obligation. This indicates that it is the bank's duty. It indicates it indicates that bank's duty is independent of buyer's performance. And fourth principle is documentary nature, which states that banks do not verify goods, but only documentary evidence. Let us now try to identify the life cycle of a documentary credit under UCP 600. The first life cycle is pertains to letter of app. The first point relates to letter of credit application and issuance. After this comes the advising and authentication to exporter. Then shipments of goods happens and preparation of the documents. The documents are then presented to the banks. Then banks go for document examination, which takes maximum 5 banking days under UCP 600, followed by either acceptance or payment or negotiation. Finally, the reimbursement and settlement happens between the banks. Let us now try to understand the different articles of the UCP 600. These are numbered articles under UCP, and we are discussing some of the most important articles that are widely being used in international trade. Article 2 to 3, it talks about definitions and interpretations. The core principles of Article 2 and 3 that it clarifies core terms and irrevocability. From Article 4 to 5, it talks about credits versus contracts and documents. The core principle under these articles is the independence and documentary nature. Between the Article 6, which is an important article, deals with availability, expiry, and place of presentation. The core principle for all these activities is the validity of the letter of credit, which is specified. From Article 7 to 9, it talks about issuing, advising, and confirming banks. And the core principle used is defining the obligations of banks. Article 14 is again an independent and important article which talks about the standard to be used for examination of documents. And the core principle used during examination is that there should be maximum 5 banking days for checking, and in no case the examination should go beyond 5 days. Article 16, an independent and specific article under UCP 600, talks about the discrepant documents. It talks about the rules for refusal and notice. From Article 19 to 25, these talk about all the transport documents. And the core principle for these articles is the shipping, air, and multi-modal rules. Multi-modal means that when an exporter importer is using more than 2 types of use, for example, a combination of air plus shipping route. Finally, Article 35, which is a very strong article of UCP 600, deals with disclaimer on transmission, with core principle being that banks are not liable for delays beyond control. Thus, we can see that these key articles clauses of UCP 600 are very important and facilitates trade. Let us now try to discuss some of the articles that are very relevant in today's times. Examination of documents, which is Article 14. Under it, banks must examine documents within 5 banking days of presentation. This is important because if time is specified, the time of exporter importer is saved for completion of the whole transaction. The second important thing in the article is that examination should be based on documents alone and not on any other underlying facts. Also, it talks about that if there are inconsistencies or missing data, then it should be put under discrepancies. In addition to this, if documents comply, payment must be honored. That is, that is, there is no scenario in which the documents are complying, but still banks are not processing the payment. That is violation of Article 14 of UCPDC. Another important thing that if documents are not compliant, then the bank must give timely notice of refusal specifying the reasons. The exporter should be aware of common documentary discrepancies. The first common documentary discrepancy is the typographical or spelling errors in goods description or values. This may create confusion as well as suspicion. Thus, the exporter should double check for any such spelling or typographical errors. The second common discrepancy relates to missing signature or unauthorized documents. Generally, when exporters submit documents in a hurry, they may miss signature. Thus, in a timely manner and upon proper checking, the document should be submitted. The third common discrepancy is expired letter of credit or late shipment date. The fourth common discrepancy is mismatch between invoice, bill of lading, and letter of credit terms. This is considered to be a major discrepancy because how it is possible that within 3 documents there is discrepancy? Because according to aligned documentation system, most of the things needs to be common. Thus, it generates a kind of suspicion on the whole documentation process. The fifth common discrepancy is incorrect insurance coverage or currency mismatch. And finally, the last common discrepancy is non-presentation of all required originals. Let us now talk about another important article, that is Article 16, which deals with handling of discrepant documents. Issuing banks must notify presenter within 5 banking days of discrepancy. This is to set a specific time so that banks may not on their own wills and desire extend the dates. The bank should also notice The notice must state refusal decisions, discrepancies, and disposal instructions. The exporter may correct documents if the possibility is there and seek the buyer waiver. Under Article 16, banks cannot delay decision once notice period lapses. As well as Article 16 protects both exporters and banks' interests against arbitrary rejection, which means that rejection should be based on certain specified reasons and not just hearsay. Let us now talk about the different transport documents used under UCP 600. Article 19 to 25 defines acceptable shipping documents, which include marine bill of lading, which must be signed, This document indicates goods on board and identifies the courier. The second, air transport document. It must be shown on the airport of departure as well as at the time of destination. The third is multimodal transport document, which is acceptable for combined shipments. The transport documents under UCP 600 must indicate shipment date, vessel or flight details, and consignee information. In addition to this, clean transport documents without any adverse clauses are preferred under letter of credits. Another important article which deals with insurance documents is the Article 28. The Article 28 states that insurance documents must cover goods from dispatch to destination. It also says that insurance amount should be more than or equal to 100% of 110% of letter of credit value unless otherwise stated. Insurance documents must be issued and signed by authorized insurer or agents. According to Article 28, the insurance document should be stated in a currency and the coverage should be disclosed to match the letter of credit terms. And finally, partial shipments require proportional coverage, and therefore that should also be indicated in the insurance documents. Dear students, let us now try to identify the role of banks under UCPDC. This is on the left column we have the bank role, and on the right column we have the primary responsibility. If we talk about issuing bank, then the primary responsibility of issuing bank is the irrevocable commitment to honor compliant presentation. With respect to advising bank, the responsibility is to authenticate and communicate letter of credit accurately to the beneficiary. With respect to confirming bank, the primary responsibility is to add its own undertaking of payment to exporter. With respect to negotiating bank, the primary responsibility is to examine documents and advances funds against them. Finally, with respect to reimbursing bank, the primary responsibility is to handle settlement between issuing and paying banks. Let us now try to understand that compliance and dispute resolution under UCPDC. UCPDC creates contractual certainty through clear standards. The disputes often arise from documentary errors and delayed presentation. International Chamber of Commerce Banking Commission issues interpretations and opinions for clarity so that disputes may be resolved or they should not arise. Banks and courts refer to UCP 600 as the primary source of practice guidance. UCPDC also encourages amicable, that is, brotherly settlement through banking channels before legal recourse. Let us now try to explore the relationship of UCPDC with other ICC, that is International Chamber of Commerce rules. We have one URC 522 which governs documentary collections but not the letter of credits. The second is URR 725 which tells the uniform rules for bank to bank reimbursement. The third is ISP 98, which is International Standby Practices for Standby Credits. Then we have the EUCP, which is version 2.0, which is the supplementary rules for electronic presentation. Together, these frameworks ensures coherence across all forms of trade finance. Let us now understand the digital letter of credits and EUCP 2.0. The EUCP 2.0 and digital letter of credits facilitates submission of electronic records instead of paper documents. These also recognizes data elements such as PDFs, scanned copies and digital signature. These also reduce delays and handling errors in cross-border transactions. Digital letter of credits and EUCP 2.0 enhances transparency and traceability under financial technology and blockchain systems. And finally, EUCP acts as an addendum to UCP 600, which means an additional benefit when specified in the letter of credit. The question arises, what are the practical benefits of UCPDC adoption? There are certain practical benefits such as the adoption ensures uniform banking practice and predictable outcomes. It also minimizes litigation and interpretive conflicts between trading partners. The UCPDC adoption enhances exporter confidence in payment assurance. Also, UCPDC adoption facilitates integration of digital and cross-border banking systems. Finally, UCPDC adoption supports trade facilitation objectives of World Trade Organization and International Chamber of Commerce. Dear students, let us now try to understand the application of UCPDC through a case scenario. The scenario is an Indian pharmaceutical exporter receives an irrevocable letter of credit from a German importer subject to UCP 600. So, exporter is from India and importer is from Germany. Exporter submits documents within 5 days of shipment. One date is mismatching from the bill of lading. What will be the action taken? Issuing bank will send a notice of discrepancy within 5 days. Exporter seeks buyer waiver and documents are accepted. The outcome will be UCP 600 rules ensured procedural transparency and protected both parties from unfair rejection. Thus, this is the benefit of applying UCPDC in international trade. It benefits both the parties. Dear students, let us now conclude what all we have discussed today. We have discussed that UCPDC 600 is the global benchmark for managing documentary credits. UCPDC 600 provides legal certainty, procedural clarity, and risk control for banks and traders. UCPDC 600 reinforces documentary integrity as the basis of payment in international trade. In addition, integration with EUCP, that is electronic UCP, and digital platforms ensures continued relevance in modern trade. Thus, finally, the takeaway of our lesson is that mastery of UCPDC rules is indispensable for exporters, importers, and banking professionals alike. Dear students, thank you very much for being with me in this session.